Chinese market and the emerging markets. We believe that for 2024, there's a lot of opportunity in those two sectors on the equity side, and I'll go ahead and explain to you why we feel that China could be outperforming other indexes next year. Today we wanted to have a look at the Chinese economy in general and the Chinese stock market. The stock market has been really horrible this year. It's one of the worst performing index of the world indexes. It's almost down 14% year to date. China has been having a hard time getting back on its feet after the COVID lockdowns. But if we look at other economic trends, it doesn't look too bad. It's just that the investors in general are not really fond of moving assets to China at this time. Maybe because the dollar has been strong over the last year and a half, and it's always a fear that when the dollar is strong, emerging markets or Asian markets suffer, which actually is true for the Japanese market. This year also the yen was weak, but maybe for other reasons. But coming back to China, we think we have an opportunity over the long run to catch some delta over with the Chinese market. If we look at the trade balance over the last 20 years, we can see that China has pretty much recovered and is back to trend with production and producing all the goods pretty much for the planet. So China still remains the factory of the world. And what has changed most likely is the fact that instead of having a trade balance, an excess trade balance with the US, they shifted their production and selling to the BRICS, to other countries. Europe also has been on the down move of this situation, and I think the BRICS have benefited a lot. And now for China, it's even better because they can do commerce with their own currency. They don't have to settle the trades in dollars. They can now do it in renminbi. They've opened swap lines with various countries, Saudi, Russia, India. And so in that sense, the events of Ukraine or the invasion of Ukraine and the fact that the US decided to weaponize the SWIFT system, the Chinese and the BRICS quickly decided to move away from the dollar and set up their own payment system. So the SWIFT option cannot be used against them in case the US do not agree with their policies. So now one of the possibilities, Chairman Powell kind of hinted that they will be able to lower rates next year, at least 3 times according to their analysis. The dollar is taking a back seat, and I think that that would power off an up move for the emerging markets, and China will benefit as well. So if you look at a graph of the equity markets in China since 2017, for example, we're back to levels prior to the COVID in 2018, and I think that the problem they had in the real estate sector, it's not as important because a lot of the debt is owned by foreigners, so the risk is mostly on foreign buyers, and the Chinese regulators were quick to inject money and try to boost the economy again. So I think it's just a matter of time before people realize that China is not going away, and it's a major partner for the world commerce. And even though there is a lot of infighting with the US policy, the foreign policy, I think that they will be able to recover into the next year, and they get another boost from the dollar moving down after 2 years of very strong trading. So the possibilities that an investor has to capture performance of China are various. There's different ETFs that will track the indexes. They can be labeled in euros, in dollars. It's a bit difficult to buy the renminbi, but you can buy it in Hong Kong, and you can therefore get exposure to the Chinese market. There's also a lot of ADRs, so those are Chinese shares trading on the US exchanges, and you can also capture the performance through there. One last point I would point out is one of the major auto manufacturing in the world is now BYD, which is a Chinese company, and they're making a lot of headway into the electric cars. And this year, there will be the largest seller and manufacturer of automobiles in the world, taking over Toyota and the other in the sector. So they are really came up with a great product that's actually starting to look real nice, and that the buyers are happy with, and they will get more efficient on the battery side, but the actually price point when the cars are exported to Europe, to the US, to the emerging countries, it's unbeatable. They really have a lead on that sector. Thank you. Have a nice 2024 and happy trading.